Hello all. Today we are going to discuss the accounting for not-for-profit organizations. So, what are not-for-profit organizations? Not-for-profit organizations are a form of a charitable institutions, or you can say schools or clubs or or any sports associations which are working with the motive of not for earning. Profit. The main motto of such organizations are to help society in its development. Okay. Now, for these not-for-profit organizations, what will be the sources of income? The sources like when we are making donations to any charitable organizations, right? Like then subscriptions for the club or for any other association subscriptions for clubs, or we can say that we are giving entry fees for using any service of of any association. Okay. So these are some of the examples of donations or subscriptions for clubs or entry fees. These are some of the examples for the receipt of the not-for-profit organization. Now coming on to further to what will be the expenses of such organizations. The expenses for such organizations will be similar to daily, you can similar to all other organizations. What will be the expenses? Expenses for fixed assets, expenses for purchase of fixed assets, expenses for electricity, right? Expenses for water. We can say expenses for if there's a donation to charitable organizations, then what will be the usage for giving food to poor. Okay. Then what will be for educational institutions? Expenses for education institutions will be expenses of salary and of teachers, of non-teachers, right? Then these are some of the expenses that are there for the not-for-profit organization. Now coming on, let's see first of all what the book says. The book says there are certain organizations which are set up for providing service to its members and the public in general, right? That's what okay. And the public in general, such organizations include clubs, charitable institutions, schools, religious organizations, trade unions, welfare societies, and societies for promotion of art and culture. These organizations have service as main objective and not for profit, as is the case in organizations in the business, right? And not the profit, as is the case for organizations in the business. Now coming on to what are the characteristics? Such organizations are formed for service, providing service to the specific group of or public at large as education, healthcare, recreation, sports, and so on. Then these are organized as charitable trusts, societies, and subscribers to such organizations are called members. What they are called members. Now their affairs are usually managed by managing of the executive committee. Okay. The main source of income such organizations are, as discussed, subscriptions, donations, legacies, grant and aids. Grant and aids is received from the government, income from investments, etc. Okay. Then these funds raised by such organizations are used for through various sources, credit to capital fund or general fund. Okay. Now, what's the distinction between capital and general fund? We will discuss in the coming lectures. The surplus generated in the form of excess of income in the form of excess. Now, this point I will explain you when we discuss the income and expenditure account. Right? The surplus generated in the form of excess of income or expenditure is not distributed among its members. It is simply added to the capital fund. Then the not-for-profit organizations earn their reputation on the basis of their contribution, correct? The welfare of society. Now, we can take an example of we can of a not-for-profit organization that's working, right? What's the example of a medical institution like Nanda Charitable Hospital? Okay, this is one of the hospitals in Delhi which is working as a charitable hospital. Now, what are its sources? Sources are donations received. Okay, then the second source is the fees, a nominal amount taken from the you can say patients or those visiting doctors. So there is something only a nominal fees. That nominal fees is, for example, rupees 50 for uh, the registration. But if you go in a good hospital, fees will be approximately 300 rupees, but not less, than rupees 50. So this is the difference. This is where the charitable institutions work. Okay. So and now if we are discussing about Nanda Charitable Hospital, then what will be the expense? The expenses are very expensive for purchase of assets. Okay. Now what are the assets? Assets are equipment of doctors. Okay. Then sitting arrangements, tables, computers, and what not we can think of as assets, which the definition of assets I hope is clear, is something that we purchase and have a long-term benefit to the organization. Okay, long-term benefit which add value to the organization, long-term benefit. So expenses for purchase of assets, daily expenses like expenses for electricity, expenses for water, then expenses of expenses of workforce. What will be the expenses of workforce? Salary to the permanent staff. Okay. Then honorarium doctors, to the doctors who are visiting, or we can say fees, professional fees rather, to the doctors. So these are certain expenses that will be incurred in such an organization. Now moving forward, what it says, then accounting records, right? Now, what are the accounting records? How we are going to differentiate? We know that there are certain incomes, there are certain expenses. Now, how we go to ascertain that whether the hospital, that is Nanda Charitable Hospital, is working in a profit in something that is not to profit, but is income sufficient to meet all the expenses or not? So for that, to ascertain whether income is sufficient to meet the expenses or not, we pay income and we prepare the financial statements of such an organization. Now, what will the financial statements contain? The financial statements will contain receipts and payments account. Okay, then it will contain income and expenditure account. And third, it will contain the balance sheet. Balance Okay, the balance sheet is written as BALANC, balance sheet. So these will be the financial statements that will be for the not-for-profit organization. For an organization having profit, okay, for the organization governed by profit motive, the financial statement will be profit and loss account and balance sheet. So these will be the financial statements for a profit motive. The main difference is in not-for-profit organizations we have P, and in case of profit motive we have only two. Now receipts and payments, income expenditure. Receipts and payments and income expenditure and balance sheet we will discuss right now. We will discuss first of all. Let me change the color. So we will discussing right now receipts and payments accounts. Okay, receipts and payments accounts is a simple form of a single form of cash flow. Okay, it accounts for all the income and expenses incurred in day-to-day life, incurred on daily basis. Okay. It is it is a form of cash basis accounting. It is a form of cash basis accounting. We have learned like two forms of accounting, and one is cash basis and the other is mercantile basis. So what does receipts and payments form? Receipts and payments form a cash basis of accounting. It's a cash basis. In this, all the expenses, all receipts, whether pertaining whether pertaining to current financial year, okay, to previous financial year or to next financial year. All all the receipts are recorded in such an account. Okay, in such an account. Now, if I ask what is the financial year for the Indian companies or the company registered in India, the financial year is from April to March. April to March is the financial year. Okay. So this is relating to the current financial year, then previous financial year or next financial year. All the financial years, be it current, be it previous, or be it next financial year, will start from April onwards and continue till the month of March. So all receipts of the same will be recorded. Similarly, all expenses, be it related to all these, okay, this will be recorded. Okay, is it clear? Yeah. And now let's see what's given in the book. The book says accounting records for organizations, okay, a financial statement and all. Then it says not consists of following, that is receipts and payments account, okay, income and expenditure account, okay, and the balance sheet. Done. This is what we have done. Then is income and expenditure account is akin to the profit and loss account. Okay, the not-for-profit organizations usually prepare the income and expenditure account, okay, and the balance sheet account and the balance sheet, okay, with the help of receipts and payments account. Similar, correct? We have discussed this. Then, however, this does not imply that they do not make the trial balance. Definitely, they will be making trial balance. Trial balance is one of the main parts of the financial statements. It's only after trial balance that income and expenditure account and balance sheet is made. Okay. And yeah, they are following double entry system as we have read in class 11th also, that now we are each and every organization in our country is following double entry system, right? Correct. And it must facilitate the preparation of receipts and payments account. Okay. income and expenditure account in the balance sheet. I think we are clear with how the accounts process, right? First, it's like first we prepare the journal entries, then comes ledger, okay, and from ledger we prepare trial balance. From trial balance we prepare receipts and payments account. From receipts and payments account we prepare income and expenditure account, and at the last we prepare. This is the process of accounting. I think we are pretty much clear about this. Now, what are the journal entries? Journal entries are day-to-day entries. Like if I am paying cash to Mohan, so what will be the journal entry? Mohan account debit to cash account, 500, 500, right? Now, what will be the ledger in this case? Ledger will be Mohan account, Mohan ledger, and a cash ledger. So two ledgers will be hit Mohan, first Mohan and second cash. Now, if I prepare a trial balance, what will be the entry? In the trial balance, the Mohan will be my creditor, so it will be coming there, and in the cash account will be my debtor, will be my assets, so it will be coming there. So both the entries will be coming in trial balance. Similarly, what will be recording in the receipts and payments? We will be only recording on the payment side. What will be recording? Being cash paid to Mohan, 500. Okay. In income expenditure account, we will make the payment, we will make the expense under certain relevant head. For example, if the Mohan was a caterer, so we are writing catering expenses, right? When you are writing catering expenses, that will include 500 rupees. So this is Mohan's account. And in balance sheet, in the asset side, what we will do if the cash was rupees 1000 in the beginning of the financial year, and we have paid to Mohan 500 rupees. So what will be my cash? 500 rupees that will be coming in the balance sheet. So these are type of the financial accounts, or you can say this is the process of following how to prepare a financial account, financial statements of any organization. And for an NPO, these two are particular. These two are particular for an NPO. For a profit organization, what will be the profit and loss account instead of these two? Okay. Now coming forward, it says receipts and payments account. Okay, receipts and payment account. This is a cash book, two-column cash book. I hope that's also clear that there's a one-column cash book and a two-column cash book. One column cash book only shows or only deals with only cash account, cash amount, and a two-column cash book deals with mm, cash as well as bank account. So this is the two-column cash book. Then they have made the aggregation. What aggregations they have made? They have received subscriptions for 2014-15. Subscriptions for 2014-15 include 1 lakh. See, it says there as subscriptions 1,20,000. Then again subscriptions 45,000. Again subscriptions 35,000 and subscriptions 25,000. Now see in the subscription payments account in the cash column by book, sorry, it's coming on the cash basis or bank basis. Now it says subscriptions that is received in 2013-14. So what is this 2013-14? This is 2013-14 is nothing but my last year or last year, previous financial year, you can say, to be precise, previous financial year cash or subscription amount received. Similarly, subscription 2015-16 is my next financial year subscription of rupees 10,000. On those basis, we have made certain expenses. What are the expenses? Insurance premium might be that a club has taken insurance on all its employees. That is the insurance premium paid. Printing and stationery, that is something. All common expenses and postage and courier fees, telephone, Wages and salaries, rates and taxes, these are my expenses, right? Now, it has shown the aggregation. See, it has shown the aggregation of subscriptions received for 2014-15. Then it is saying subscriptions received for 2013-14. That is 30,000 rupees we have discussed. Then subscriptions for 15-16, 10,000 rupees. I have told earlier also 10,000 rupees, right? Now the entrance fees, okay. Locker rent, okay. So these are form of aggregation of receipts. Now it is an aggregation of insurance premium paid. Insurance premium, how we have paid. This is form of printing and stationery insurance premium lightning, right? Rates and taxes, wages and salaries. Why it has aggregated? It has aggregated so that I can show it in my income and expenditure account as I was saying here, right? Like for example, if this is a catering expense, so I have paid 500 to Mohan. So my income expenditure account will show catering expenses as rupees 500. So this is the same type of aggregation that I had made. The book is also making aggregation underhead wages and salaries. I hope it is clear till now what we are discussing. Now comes this is the format of receipts and payments account. What all it is saying? It says donations, it says general or specific purpose, correct? What is the donations received? Donations for general and specific purpose, right? So I will discuss that 1 minute. The donations for general or specific purpose. Donations are of two types. One is general and one is specific. Okay. Now what is general? General is something amount or donation received, okay, without any specific direction. What can be the specific direction? And like let's just say I will be discussing this one. Okay? So and specific is donations received with specific directions. Now, what will be the specific direction? The specific directions is something like this type of donation to be used only and only for purchase of computers. So this is a type of a donation with specific direction or donation received only for payment, only for payment of salaries to teachers. So these are type of specific donations, right? Now, when there is specific donation, if you say that this is a specific donation, the such donations will only and only be grouped. These specific donations, okay, specific donations will only be grouped under capital account, or you can say balance sheet. These general donations will be coming under income and expenditure account. Now, if we discuss about receipts and payments, what about receipts and payments? We're discussing receipts and payments. Both the type of donations, be it general or specific, will come under receipts and payments account. Receipts and payments is only and only concerned with cash basis. If the cash received, it is taken as receipts. Okay, it is grouped under receipt. If cash is paid, it is grouped under payment side. So receipts and payments is only concerned with cash basis. Debit, what comes in, credit, what goes out. Now, how we can say debit what comes in, credit what goes out. See, this side is the debit side, and this side is the payment side. This is the credit side. So debit what comes in, credit what goes out. This is the one of the principles, or this you can say is one of the main thing that we have learned in the 11th class. Credit what goes in, credit what is received, and debit what goes out. Oh, sorry, I am saying a different thing. I am saying in a different manner. It's debit what comes in and credit what goes out is the main say practice based on the receipts and payments account. What all it contains? Similarly, yes, one more thing. Similarly, this is these donations, which are specific and general. Similar is the case with legacies. Okay, legacies. Then similar is the case with the subscriptions. So these they are also general as well as specific. Okay. I hope it's clear till now. Sale of investments, subscription from members, life membership fees, sale of old sports material, then interest on fixed deposits, sale of scrap, grant in aid. These are my receipts. Now what are all will my payments? Advertisements, wages and salaries, postage and courier expenses, subscriptions for periodicals, charity, insurance. These are my payments, right? So it has prepared a receipts and payments account for the year ending. It is showing me balance gone down. Okay. Then it shows me subscriptions, general donations, then periodicals, sale of old sports material, interest on fixed deposits, local locker rent, sale of scrap. These all are my receipts and balance gone down bank overdraft, wages and salaries, rents, rates and taxes, insurance, advertisements, honorarium we paid, like honorarium we had paid to the doctors in that hospital, repairs and renewals, purchase of assets. Okay, see here, upper it is on the above. First of all, it is specified as general donations. Below it is classifying it as specific donations. So both the donations are being mentioned in receipts and payments account. Okay. Now it may be noted on the receipt side, receipts and payments account gives a list of revenue receipts, correct? And paid current as well as capital receipts. Similarly, list of revenue, the past, current, and future period. Okay, this is what we have discussed already. Then the salient features. What is that? It is a summary of cash flow. It is form of identical with that of simple cash flow, correct? It shows the total amount of all receipts and payments with respect to the period to which they pertain. Then it includes all receipts, whether they are of capital nature or revenue nature. Okay. Then no distinctions made, correct? Then it contains no non-cash items such as depreciation or spending expenses, correct? Because it's a form of a cash book, right? So non-cash items will not be concerned with receipts and payments account. It begins with opening cash balance, right? And the cash at bank or bank overdraft. Okay. Step in preparation receipts and payments account. I think we have discussed this. This is a summary of a cash book of the earlier example that was there, that is golden cricket club. So it is showing me the summary of cash book, and it will show me receipts and payments account. Right? Now these are the illustrations, and I hope this illustration, please try it yourself for the first. And secondly, if you have any doubt in any of the questions regarding receipts and payments or any other chapter that we have not discussed in this, please do um, mail me or do mark it in the comment section of either if it's an NCERT book that is the same book, then just tell me the question number. If it's a different book you're dealing with, just tell me the problem that stays in that book. You and I will try to solve your queries and all. So we will be discussing the receipts and payments account in the next video. Till then, please stay tuned to this lectures, and also if you think that these lectures may help any of your friends who is in a doubt, kindly do share with them and be kindly do share with them, and also just keen or keep in tune yourself with income and expenditure account and the balance sheet that we'll be discussing in the next lecture, so that you may clear your doubt. Your doubt may be clear for that also. Thank you.